Hello everyone, Michael here with Bear Coast Real Estate in Dallas, Texas. Earlier this week, the FHA announced a huge cut of 30 basis points to MIP. But if you're not in real estate, that probably doesn't mean anything to you. So I just want to make a quick video letting you know why it's great for you as a buyer. First of all, what is MIP? You may have heard it called MI, you may have heard it called PMI on a conventional loan, but it's all the same thing. It's basically because the bank is putting up hundreds of thousands of dollars and you're only putting up a few $1,000s, it's very risky for them. They're taking a huge risk on you, hoping that you're actually going to pay your bills. On the off chance that you don't, they then have to take over the house, go back to market and sell it, and that's very expensive to do. So if you don't pay your bills, they then have to take the house and sell it, and it's going to cost them at least 7% of the sales price to do that. It's very expensive. And that's assuming that the market hasn't gone lower and that you didn't damage the house and they have to repair it. So it's very risky for them. So because of that, they make you buy an insurance to cover them in that scenario. So that's all mortgage insurance is. Now for conventional loans, once you get to 20% equity, either because you paid down the principal or because your house appreciated so much, then you can ask the bank to remove the PMI and then it goes away forever because the bank says, okay, you've got 20% equity. That's safe enough for us. You don't have to insure us anymore. But it's different on FHA. On an FHA loan, if you put 10% down or more, then your mortgage insurance will stay on the loan for the first 11 years and after that it goes away. But if you put less than 10% down, which is most FHA buyers, then your mortgage insurance stays with the loan for the life of the loan. Even if you have 90% equity and it's now very safe for the bank, you still have to pay that mortgage insurance. And that may not seem like a great trade for you, but remember, they're taking a huge risk on you in the first place. They're putting up hundreds of thousands, you're putting up almost nothing. Also, keep in mind, most people are going to sell their home within 7 years. So don't worry about year 30 when in reality, you're probably going to sell way sooner than that. But if you think that you really just want to hold this home forever, you can always wait until it's appreciated enough or you've paid down enough and you do have the 20% equity, and then you can refinance to a conventional loan and it'll get rid of your mortgage insurance. But back to the point of this video. So the FHA announced that they're dropping the cost of MIP by 30 basis points, and this is going to start on March 20th, which means if you're getting an FHA loan, and lots of people are right now because a lot of times FHA interest rates are actually lower than conventional, which that's not normal. So if you do get an FHA loan as of March 20th, your payment is going to be cheaper, which then means you have more buying power. So what does this mean practically? The very quick math, I love to give quick math stuff, is for every $100,000 of loan that you're getting, your monthly payment will go down about $25. So if you're getting a $300,000 loan, your monthly payment will now be $75 less, which doesn't sound like a lot, but it's significant because it will essentially let you now afford $10,000 more house. Another quick math that I like to use is if you buy a house that's $10,000 more expensive, it raises your monthly payment about $75. So in this scenario, if your monthly payment goes down $75, that means for the same monthly payment as before, you can now afford $10,000 more house. So I realize that's probably confusing. I don't know if I'm explaining it great, but if you have questions, you can ask them in the comments and I'll be happy to try and clarify a little better. So if you're currently qualified for a $300,000 loan, if you wait until March 20th and rates just stay the same, which I have no idea if they will, you can expect that you can now afford $10,000 more house, or you can just stay at that same price point and just enjoy $75 less a month. So that's it for me today. If you got any value from this video, I would love if you would hit the like button, and I look forward to seeing you in the next video.